everyone. Welcome to the Stock Market Morning Prep video for Tuesday, April 1st. First day of the month, first day of the quarter. We usually get some decent price action here. So yesterday we had the Janet Yellen pump of the stock market, saying that they're going to do whatever they have to do to keep the stock market elevated. In my words, so to speak. So let's see what happens going into the next few days. We have some key event risks happening. We have, of course, the ISM manufacturing today, and of course, we have the non-farm payrolls that come out on the first Friday of every month, which is definitely a market mover. Now, couple things that I wanted to discuss. I'm not going to go into any indicators. Really, nothing has changed. We gapped up and pretty much stayed elevated most of the day. So volatility has been sort of anemic for the last couple of days, but we are getting some sort of renowned buy interest, so to speak. So let's see if we can at least kind of push and test the highs here. I am going to look at the dollar index, the DX today. I want to do some analysis on that and see where that goes, because it will be a market mover. And anytime you have a new quarter, a new month starting at the same time, we usually have a key trend moving, or we have a trend reversal starting to form. So it's going to be interesting to see what happens. Obviously, no one knows where the market will be headed, but news will trump the chart. So this key economic data will definitely either have the market continue its move higher or revert back to the downside, and then possibly even start a correction. That's how intense this non-farm payroll report is going to be. Anyway, let's get right into it. Dollar index. What I did was I wanted to really kind of dissect what's been happening. And we had this bearish symmetry of lower lows, lower highs. We definitely broke out of that on the March 19th, and we've been really just consolidating in a range here. And as you can see, that this consolidation of this symmetrical triangle or pennant, if you will, we're into the apex. Now, I would suspect that the dollar would probably start breaking out higher. It looks that way, right? It obviously does. Now we have this bullish breakout, breaking and alleviating this bearish downside pressure, and now we're starting to be in this apex of this triangle. We have the RSI here really elevated nicely from the lows, and it still has plenty of room before it gets extremely overbought. So that's another good sign that that the momentum is shifting to the upside. Now, what I did was I took a Fibonacci retracement from this local high to low, and then what I did was I brought it back down, and I did the same from this higher low to the same, the higher high up in here to this low again. And what I did come up with was a little bit of a Fibonacci retracement, a little bit of a cluster of resistance here, which is the 23 from the bigger high and the 50% from this local high. And we do have some resistance line. And as you can see, it's been capping it for the last 6-7 trading days. So it'll be interesting to see what happens. If, in fact, we break out, obviously your next target will be the 200-day moving average, but then also you will have the 1272 extension, which will come up here. Now, if that happens, you're going to watch out for a lot of the major currency pairs that affect the dollar, trade with the dollar, and of course commodities and stocks. So we need to really pay attention to what's going to happen here in the next coming days, because this is going to be a key market driver of equities. Okay, now let's dive into the ES. Now here's a monthly chart, right? We made a new intraday high of 1887.50 in the ES. We did have an outside month put in the candle. You could see here, we did just barely did that. Now we're starting the new month. So, but I wanted to show you that. So we did not have a reversal like we did here, but we are continually to just drive up on a monthly basis. So this is very interesting to see if this market can sustain itself. Now remember, guys, the markets are fairly valued here, so there's really not much of any type of discount unless you're looking to buy a stock that's been beaten down for whatever reason it may be. But markets are fairly valued, so you got to take that into consideration here. Unless just playing that greed train of the Fed continually put money into the market, and they are starting to taper, as you can see, but ever so slightly. So as long as that happens, I think the markets will chug along. In the longer term picture, the markets are in good shape. but we do need a correction here. Okay, so the E-mini S&P daily chart. I had the symmetrical triangle. I just readjusted here. We're still within this triangle. We are at the 1272 extension. We usually caps the move here. So keep an eye on this this extension. If it could break out, then we'll hit the 1618 of 1919, which I think that's where we're probably headed. But again, it could easily break down first and then recorrect itself. So this is a tough call. We really don't know what direction we want to go. It looks like it wants to go higher, but remember, we could hit this 1272 again like we did here and start to roll again. So just use caution here. Some of the key sectors are looking pretty good too. Here's the hourly. We had that head and shoulders pattern. Now the head and shoulders is retesting this right shoulder. So if it starts to break out and it's going to have a head test, it'll really be a double. It'll be a double top. I'm just going to clean all of this up. But right now we're okay. But as you can see here, we did break. And what happened? We broke, and then we ran right back up again, and we're starting just to kind of chug along again. So this head and shoulders pattern will probably not work out, and that's why you need that trigger, right? No trigger, no trade. And then we're going to look at the Dow Jones, and we'll look at a couple of things here. The transportation sector is starting to look absolutely interesting here. Now, remember, this is our market leader. We have a nice ascending triangle. We do have a test here of the highs a couple times, and we failed to break out of it. This is possibly that now, if this can really get going to the upside, this will definitely help equities. Now, and I'll show you why. You dial into the transport, and you have KSU. We pick one, and as you can see, it is now starting to break out of this little consolidation area here. Very, very good. This is a good sign here, guys, that the market wants to go higher, at least the transports. And if that happens, you'll catch this 200 over here coming in at 106.50. Take a look at another one. If let's say CNW. Looking pretty constructive here. It looks like it wants to break out as well. And as you can see, these are the components of the transportation sector. Dow Jones did very well too. So if you see this area starting to break out and you see the components in the transportation sector breaking out, that's also a very good sign. Now, also energy. Energy is doing quite well. If we look at the SLB, like I said, now we need pullbacks in this. This is very extended. You do not want to be chasing the oil service sector. But if you look at the XLE, you'll see that it also broke out. Okay, and now we look for that back test to get involved again. Remember, if you remember, I had mentioned I would not be looking to look to short the XLE, which was, if you remember, we had this bearish rising wedge forming, and it broke. And I said I wouldn't be looking to short it. I'd be looking to be a better buyer. Why? Because of the XLE index and because of crude oil and a lot of the components in the XLE, the OIHs, they're moving very well. And when the stocks move, the crude oil, the ETF, or the commodity in this case would start to move well, would start to really muster some steam. And look what happened. Consolidation breakout. That's what's important to follow these ETFs. It's very important. That's how you look for those golden nugget trades. You look at the ETF, you dial into them, you take the top 5, top 3 charts, and you watch them and put alerts on them. And as you can see, they're all coinciding the same. We have the same pattern recognition. We have consolidation and then breakouts. So money is flowing into energy. Now, if they flow into energy, they should flow into alternative energy. And number one being, as you can see here, we had a nice move. We had a break back down. This was BTU got downgraded, and sure enough, recouped itself, and then now breaking out again to the upside. So some of these smaller names, if you want to look at the CNX, you can look at CNX here. It had a big move, and now it's kind of consolidating. And then you have some of these small names like ACI. You know, the Arch Coal, and did quite well. Okay, looking at TAN, the solar ETF. Now, this is going to lag a little bit, so you got to be careful, and it's definitely a little bit of a volatile number. But if you look at stocks like the FSLR, which had that tremendous breakout, it's holding up quite well. And this is definitely this is the leader of the solars. But SCTY really not doing much, as you can see, kind of breaking down here. But then when you have stocks like SUNE doing well, holding up. This is what you want to roll into, is the SUNE, something like this that's holding up well, that has a good pattern, a good base building. JASO, J-A-S-O. Not bad, okay. As you can see, yes, it needs work, but remember, when they start to go, they go. They just break up. So you watch some of the solar sectors for a trade. Get into coal for the alternative energy, and also the banks are starting to take shape again. XLF. We could see here making higher highs and higher lows, doing nothing wrong here, and this is going to be really the key area to get taken out. Morgan Stanley doing okay. I'd like to see it get back above the averages, but it's not doing anything wrong. If we get back above the averages, I think Morgan Stanley will be one of the better ones. It reported it passed the stress test, and not only that, they raised their dividend and doing a big buyback. So Morgan Stanley would be definitely something that you want to take a look at. J.P. Morgan. Doing okay. It's a little extended, but Wells Fargo, you look at the Wells Fargo, and these are some of the good quality banks that you want to take a look at. Now remember, when you look at some of the banks moving, energy moving, tech moving, transport's doing well, that means that you have some additional upside potential. But remember, guys, news will trump the chart, so just keep that in mind, okay? All right, guys, let's see what happens today. Short video, but really not much going on. I need to see the markets need to really prove itself here. So it's good to be light. It's good to not do too much trading. There's no reason for it. The markets are telling you lighten up the load and back off on the trading until we have some momentum coming in, we have some volume coming in, and we have some price movement. Right now, we're just literally just chopping around, going up, going down, and really not much is happening. When you get this opening, you get a gap up or a gap down, and then it just goes sideways. There's not really much to do, so you want to just to step aside. Believe me, there'll be plenty of movement in the marketplace to take advantage of. Have a great day, and we shall speak to you tomorrow. Take care.